Welcome to the WTR Small-Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-Founder and Chief Marketing Officer of Water Tower Research. In today's special podcast episode, I'm honored to welcome back to the WTR Small-Cap Podcast Jason Paltrowitz, Executive Vice President of Corporate Services at OTC Markets Group, and my colleague and WTR Co-Founder and CEO, Shawn Severson. Today, we will have a timely discussion on such important topics as OTC's recent global engagement activities, discussing expanding cross-border listings and how they favorably impact issuers and investors alike, review U.S. investors' heightened appetite for European securities, and review key aspects of how OTC will continue to enable efficient cross-border capital access heading into 2026. Good morning, Shawn and Jason, and thank you for joining today's podcast.
Morning, Tim.
Thanks for having us, Tim.
Glad to have you back. Jason, OTC recently hosted both the Nordic Investor Day and Global Markets Forum at OTC's New York headquarters, two major events that drew strong participation. What stood out to you as you look back from those discussions about global capital access and investor appetite?
Well, there's a couple themes that run through it, and thank you for having me again and referencing. We hosted a Nordic Investor Day 2 weeks ago, and then last week in conjunction with Aquis Stock Exchange in the UK and the Canadian Securities Exchange, we hosted our Global Markets Forum. All of those were highlighting a number of unique early stage growth companies from the respective regions. And I think the key themes are the things to think about as we're looking globally and what the market is looking at is really an appetite to look outside the US for opportunity. I think we've started to see, and the data would show it, and the activity globally shows that US investors specifically are looking beyond the US for opportunity. All the talk about the markets in the U.S. running up and the Dow and the S&P are gangbusters. But if you kind of look beneath the fold a little bit, it's not all a rosy picture. And certainly the S&P 500 outside of the top 10, which now represents 40% of the index, has a little bit of it's kind of flat, nothing really exciting. Whereas if you look to those peer companies in Europe, they've traditionally traded at a significant discount to the US. And I think as investors are looking at markets, they see those opportunities. And to the extent we at OTC Markets can bring those opportunities to investors directly, that's what we're looking to achieve.
Thanks for those important observations. So Water Tower Research was part of OTC's recent Global Markets Forum. How do collaborations like that across exchanges and research platforms help broaden the investor conversation around international companies on OTCM?
Well, we really appreciate the partnership with you guys. And quite honestly, I'm not that smart. So I am really good at understanding and speaking to companies and understanding cross-border equity markets. But to have, the expertise of the research analysts at Water Tower to be able to sit with our companies and ask really deep and penetrating questions that tend to be on the mind of the investors, but sometimes in those events, the investors are too afraid or timid to ask, I think really adds a tremendous amount of value. Your team does a great job in doing the research and understanding kind of the real fundamentals of the companies. And having those observations and that kind of Q&A that we had in our event really added a tremendous amount of value. And I think as I've gotten the feedback was very helpful to the investors that were there, again, wanting to hear directly from the company, those types of things.
That's great. And we also very much enjoy collaborating with OTC. So being the road warrior that you are, I know that you just returned from a Toronto business trip as well. What themes emerged from those conversations about Canada's role in the cross-border ecosystem?
Well, Canada is first and foremost, and sometimes they hate me saying it, but first and foremost, it's a resource economy. And we are in one of those great upswings from a mining, exploration, and resource perspective. And when you match companies coming to market looking for capital in heightened valuations, and you couple that with what is traditionally the US self-directed investor appetite for investing in those types of companies, you have a match made in heaven. They're the supply, we're the demand. and working with whether it's the Canadian Securities Exchange or while I was up there meeting with the TMX and the TMXV and CBOE, right? It really is kind of a marriage made in heaven in bringing some of these great mining resource technology, even exploration companies to that natural investor base that's looking for those investments.
Great. So moving on to Europe, which I know you're also going to be returning to very soon. You recently met with such leaders from high-profile companies as BASF, Bayer, Lufthansa, and Infineon, as well as the Deutsche Börse. What is the mood among European corporates right now about engaging U.S. investors and our deep pools of capital, and how are they viewing OTCM as part of that strategy?
Yeah, well, I spent a lot of time in what we call the DAC region, Germany, Austria, Switzerland, and as you rightly point out, I'm going back. And so, this is the common theme this year is that the U.S. investor, whether that's institutional, family office, retail, is really looking to Europe for growth. And so across our markets, just this year in the first 3 quarters, we've seen dollar volume in Europe up over 40%. Dollar volume in Asia has been up 35% plus or minus, right? So huge increases in trading volume and value in those companies. And so the question for those companies is how do you tap into that market? Now, there's really two paths or three, I guess. The first would be do nothing and hope that all the investors just come to you, which is a common misperception that US investors have the ability to go direct to Germany, Switzerland, Austria, the UK, multi-currency, multi-custody account, very expensive, not really for most US investors outside of the large institutions. So you could do that. The second would be you could do the traditional cross-listing on the New York Stock Exchange or NASDAQ. That means if you're a BASF or Bayer that you have to become an SEC reporting company, you become subject to Sarbanes-Oxley, you have to reconcile your financials to US GAAP. Huge amount of cost and complexity to, in essence, mirror what you're already doing in Deutsche Börse or the London Stock Exchange or wherever you have your home market. And what ends up happening is the New York Stock Exchange or the US starts sucking the liquidity out of your home market and becomes the primary market. So if you're a national champion, maybe that's not the end result you want. And then there's us, right? We are the largest stock market for non-US equities in the US. And we give that third option, which is the ability to utilize your home market disclosure to trade on a fully electronic regulated stock market here in the US without having to do that duplicative reporting and accounting and all of the things that I mentioned. And so those companies like Bayer and BASF and Lufthansa and Infineon all want access to the breadth and depth of US investment, whether that's retail, family office, small or large institutions, but they want to do it that's in a way that's efficient, cost effective, and that allows them to remain national champions on their home exchanges. And so that's what we at OTC Markets provide. That's why we do it for 600 plus companies on our QX market, 1,300 on our QB market, 1,400 on our ID market, and continuing to grow as those pool of companies realize the value that we provide and the access that we can give them.
Yeah, it truly is invaluable. It was not lost to me, Jason, that the European media really seemed to pick up on this list local, trade global model. How does that message resonate with companies who want to stay anchored to their home market while accessing US capital?
Well, the media loves a story, and the story in Europe for the better part of 2, 3 years has been this concept that companies should just leave Europe and everybody should list on one of the major U.S. exchanges. And you saw that with companies like ARM and Birkenstock and some of the other big name IPOs that occurred there. But the reality is, well, first of all, when you do that, you're still a foreign company. And so while you're doing all the cost and complexity of trading in the US, you're still trading at a discount because you're viewed as a foreign issuer. But you're also leaving your home market. You're in essence becoming a big fish in a small pond to be a small fish in a big pond. And so that list local, trade global, identifies that you should stay anchored to your market. You can have all the upside and the benefit of US investment and access to US without having to give up who you are. And if you're Lufthansa, you're a German airline, that's who you are. What's the benefit of coming to trade alongside American Airlines where you're just an outsider? And so it resonates as the media continues to push this narrative that companies should move and leave their home markets. And we can kind of come in and say, well, wait a minute. It doesn't have to be New York or Germany. It can be New York and Germany. And that's the message that resonates. And I think that's why we've had such a great year this year and then the end of last year as we speak to those issuers that are looking for that alternative.
It has been a great year for the OTC for sure, and I congratulate you on that. So I appreciate those thoughtful answers, Jason, and I'm now going to turn the podcast over to my colleague Shawn Severson to ask a few questions.
Great. Thanks, Tim. Jason, good to see you again.
You too, sir.
So being an analyst at my core, I've got to go to numbers, right? So we're going to talk, if I can ask a question about the Q3 international numbers, definitely showed some strong momentum for you. What's behind that and driving that?
Again, I think what's behind that is U.S. investment, really taking a good hard look at the U.S. equity market and seeing that perhaps it's very much AI weighted. And so if you look outside of kind of that AI and big tech, you see a market that's, the performance is significantly weaker than what the headline numbers would tell you. And again, if you look at the S&P 490, up to the positive, but not in the same way that the overall S&P is when you look at those 10 companies that make up the 40% of the weighting. And so you're seeing investors saying, okay, I still want to drive that train as long as those top 10 keep going, but how do I diversify out of that 490 or out of some of the other things? And when you look at markets like, the UK, which has been trading consistently at a 40% discount to the US, you see that there are opportunities there. Germany, the same way. You're also seeing a realignment of quite honestly, the global economic world. And so you look at what's driving things into Germany, a lot of that is German defense, German industry, where Europe is taking a good hard look at its relationship with the world and are starting to take in and become self-sufficient in these things. And so companies like Rheinmetall, which is a large German defense company, are seeing huge increases as investors want to take advantage of that kind of global realignment.
Interesting being way behind in the AI spend as well out of Europe. There's a lot of catching up to do there for sure.
Yeah.
In addition, so interesting. And yes, I had another big milestone on the OTCQX, and that was Aviva's addition. What does it say about the quality and caliber of the companies that are coming to OTC, and and how investors are viewing this, and importantly, how companies are viewing this?
Well, I think over the 15 years I've been doing this, our market has evolved. And not only has it evolved internally, but in terms of the regulatory environment in which we operate, it's evolved. And so, in order for companies to be successful, in order for companies to have access, and in order for investors to invest in these companies, a lot of those rules have changed and the requirements have changed such that companies need to own their disclosure and start kind of taking an active role in what they do when they're trading on our markets. And so companies like Aviva see that. They want to take advantage of that. They want to be good corporate citizens. They want to maximize their digital footprint in the United States. And the way to do that, again, like I said, joining one of the major exchanges and taking on that cost, complexity, and burden is to join one of our premium markets, our QX market in the case of Aviva. And to make sure that disclosure and that corporate governance is best practice, that U.S. investors have access to it, that it's meeting the SEC requirements of Rule 15C211 and 12G32B. And we don't have to go any more into that for your audience, but these are important things if you want your stock to be tradable and visible in the U.S. And so more and more companies see that new landscape, see the advantage of diversifying their shareholder base because it helps their home market liquidity, it helps their valuation, it helps extend the number of investors that have access. And so we again provide that, and I think that's why we're seeing the trends we're seeing.
Thanks. And I know you touched on a little bit before about the U.S. investors in the European markets or global markets and opportunities. But clearly, the markets are becoming more connected. Investors are looking for opportunities to invest abroad, and obviously, you create and the OTC creates a very frictionless way to do that. So, how are you positioning yourself between these U.S. investors and leading companies around the world? Because clearly, this creates a seamless way for U.S. investors to access global markets.
I think, you should come work for us. You gave a great answer, right? We are the seamless connect. Look, we're the cost-effective, efficient, easy way for non-US companies to trade on a regulated electronic stock market that has access to the full breadth and depth of US investors. And we've been telling that story and fighting that fight now. For me, it's been 15 years. And we can, the small upstart when we continue to grow, but that's how we position ourselves. Our electronic trading platforms, our ECN and ATS, are connected to the hundreds of market makers, 100+ market makers, the same market makers that are trading New York Stock Exchange and NASDAQ. So Citadel and Virtu and Jane Street and G1X are all connected in to provide access to US investors to those issuers from overseas in a seamless and efficient way. In the same way it would happen if you were buying on the New York Stock Exchange, Toyota, or any of the other foreign companies that are listed there. And so that's how we position ourselves is from what we do to the brokerage community, to the trading community. We are an efficient operator of a super ATS that's Reg SCI regulated, where these market makers can connect and trade. And from an issuer perspective, we are connecting them to those market makers that are serving the investor.
And maybe another way to present that is, let's say they weren't listed, international company was not listed on the OTC, and I'm a US investor in my Schwab account and I want to buy shares of a German company. What do I have to do in that case if they're not listed with you?
Well, I mean, now we're getting into like the real basics, which is probably where I should have started, is if you don't have a US ticker symbol,
Right.
One of the 5-letter ticker or 4-letter ticker symbols, the fact is you're not appearing on Schwab at all, right? Schwab
Right.
is Schwab and E-Trade and all of the the US regional brokers and retail brokers. They're not quoting German ticker symbols or British UK ticker symbols or Japanese ticker symbols. So having that UK ticker symbol or that US ticker symbol in the US ecosystem is the first step to being able to have any US investor that's trading on on their phone be able to buy your stock. And that's really important. And I did allude to it earlier, is that a lot of companies don't recognize that. Fidelity can go buy you anywhere because they have that breadth and depth and those custody relationships with their prime brokers and banks. But Jason Paltrowitz doesn't. And so he needs that bridge if he wants access to that type of investment. He needs that bridge, but he also needs the comfort of knowing that the disclosure and information that he's getting is timely and accurate and meets the regulatory burden that is put on the company.
Yeah, absolutely. And just the ease for the international companies to access the US investors. This is just a incredibly smooth pathway because nobody else is going to go through that trouble, right? I mean, it's not going to be on your screen unless you're a professional institutional investor with big resources.
Yeah, and if I'm a company and I'm like, well, people can buy me, it's not that I'm the A company, it's that a US investor wants to buy multi-company.
Right.
Multi-company, multi-currency, multi-country, incredibly if you could do it at all, incredibly cost prohibitive and inefficient. And that's just talking about accessing the market. Forget it if you're getting dividends or you want to receive corporate actions announcements.
I was saying currency alone.
Yeah, well, you're talking multi-language, multi-currency, multi-time zone becomes really difficult.
Right. Now, thanks. That was a great overview. Very important for companies to understand that. Last question I have is looking ahead to 2026. Obviously, a lot of momentum in international. Great conversation today. What's next on that horizon? I mean, is there specific geographies, or is this just some untapped opportunities around the world? But where do you see the highlights coming in 2026 and internationally?
Well, I think we're going to continue to leverage the progress we've made both in EMEA, Western Europe, South Africa, and in Asia. Next year, I think as we look to the APAC region, We're positioned to actually open up some new markets, which I think is going to be interesting. So bringing securities from markets that didn't have the ability to access the U.S., something we're looking at. And then not necessarily from a corporate issuer perspective per se, but we launched we launched overnight trading this year. And so both from an NMS perspective and a overnight perspective for OTC securities, we see that continuing to build into next year. And so then it becomes the story of not just accessing US investors, but kind of the flip of what I said. If you're an Asian investor that wants to trade in the UK and Germany and Switzerland, you also have the same problem of multi-currency, multi-time zone, where with overnight trading, you can trade into the US in US dollar in a single account in your daytime. And so I think that from an issuer perspective provides access in, again, a very efficient, streamlined way to use your US OTC security to access investors from not just the US, from around the world. And I think we'll be leaning into that as the market continues to develop and as we build out our business into 2026.
Great. Thanks for that, Jason. Great topic. Very important. Maybe overlooked a little bit in some cases too, but a critical topic for issuers and investors to understand. I'll turn it back over to Tim and we'll conclude today's podcast.
Thanks, Shawn.
Jason.
Jason, just one extemporaneous question, if I may. So it's obvious that the foreign issuers want access to the deep capital pools of institutional investors. I'm curious, do you get many questions about them being able to access retail investors in the U.S., given that they've become a more important player in the last few years?
Absolutely. And that's been a big part of the drive is, I made this joke, and maybe I shouldn't make it because everybody gives me grief about it. But when I started, nobody wanted to touch US retail.
Right.
And the joke I make is that US retail 15 years ago was deemed the blue hair old ladies, right? People that were buying stock and were calling you. If you were an IR officer, you were getting calls about where's my dividend check. The US retail investor has evolved to a very sophisticated group, which collectively I would call the largest institution in the US. And they tend to buy, they tend to hold, they tend to be smart, and they tend to be wealthy with a lot of, excess money to invest. And so it is very much a key component of our conversations with issuers is being able to cost effectively tap into those investors, knowing that you're not going to come to the US and roadshow all over to meet them. So what do you do to keep the screens lit up when you're not in the US or you're not in Des Moines or Denver or Dallas, right? And that's what we provide, that connectivity electronically in a data-driven world to provide that access to those investors.
Yeah, great answer. Shawn and I find ourselves routinely educating executive C-suites where they say, I want nothing to do with retail investors, to which I say, that's a really naive comment. That is your incremental buyer that you want.
Yeah.
So thanks again, Shawn and Jason, for joining me again. And Jason, when you get back from this next 2-week swing in Europe, you're welcome to come back on and tell us your observations.
Look forward to it. Thank you guys both.
Great. Thanks, Jason. Thanks, Tim.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small-Cap Spotlight Podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.